All right, it's 101. So I'm going to get started. Today's topic obviously is reverse mortgages. My name is Brian Allen. I'm with CoLab Lending. I've been with CoLab for 5 years now. And maybe I should tell a backstory of how I got involved in adding reverse mortgages to my bag of tricks. Back in 2007, both of my parents were 63. And uh, as you may or may not know, 62 is kind of the age when you are eligible. There are some exceptions, which I'll go over, but at 62, you can do reverse. So both of my parents are great examples of how I consult people. My father, 28 years, I believe, as a CPA and controller for Mobil Oil. He's a numbers guy, and so he understands the math of it and was anxious to do a reverse as soon as possible. My mom, just the opposite, very creative, masters in Shakespearean literature, and doesn't understand reverse mortgages. And at any given time, you can't even talk about it with her. And then maybe there's some curiosity sometimes. She is the perfect candidate for a reverse mortgage, but because she has she's built a wall, she will never do one, I don't think. It would make her life easier, but it's one of those things where you can give the information, but if they don't want to do it, you just can't force people to do it. So my brother and I actually started the reverse mortgage division of the company we were working with. Usually people will do just a forward mortgage or just reverse mortgages because reverse mortgage is a whole different animal. Takes a lot more hand holding, a lot more time, and you're not it's not transactional. So forward people tend not to like to do reverses. I go either way because I tend to consult on my forwards as I do with my reverses. So the reverse mortgage, the loan available to homeowners 62 years of older, with exceptions, of course, down to 55, that allows them to tap into the equity of their homes. And I have the National Reverse Mortgage Lenders Association website there. That is the objective third party kind of watchdog group for reverse mortgages. I'll go to the website by the end of this just to show you. But if you are thinking about one or your relative is thinking about one, that's where I would start just to learn, other than this webinar. So I wanted to just dispel myths about reverse mortgages. I think it's important to know that the majority of reverse mortgages are the FHA home equity conversion mortgage, otherwise known as the HECM. Now, there's many lenders out there who have their own proprietary reverse mortgage, but what I'm talking about today is the safest, I believe, in my opinion, reverse mortgage to do because there's so many stop gaps in there to protect the borrower. So the number one myth that the lender owns the home. It's not. It's just like a forward mortgage. The homeowner is on title. You have title, and eventually there's always an opportunity to pay that off. So you're just like in a forward. On the reverse, you are on title to the home. Okay, and then myth number two, they can take your home if the loan amount exceeds the value of the home. This is the one where you have to be careful and make sure that you're doing a FHA HECM loan. I know specifically that Chase has a loan where a reverse mortgage where they actually can't take the home if you don't pay. And if you're upside down in the loan and you can't make up the difference. But with the HECM, you only owe what the home is worth. So I'll also show you what it looks like when I'm doing a consultation. We plug in some numbers and show you where the home may be upside down, where the loan amount exceeds the value of the house. But as long as you're paying your taxes and insurance, which you would be doing on a forward mortgage also, you'll be fine. Or as long as you're not out of the house more than 364 days, the loan will not come due. for the heck'em. And with foreclosure, say you're in a Ford mortgage, there's a mortgage on it, and it can't be paid. The parents pass away, the kids can't afford it. You have pretty much 90 days to do something with that mortgage. With a reverse, they've built in 6 months. Really, what you do is you have 30 days to show that you're either going to sell the home or you're going to continue, or are you going to buy the home and continue to own the home? So you would have to show either the listing or show that you're the loan documentation within 30 days. Then you have 6 months to sell it or buy it. And if at the end of 6 months, let's just say you're trying to sell it, it hasn't sold yet, you can apply for a 90-day extension. And if after that 90 days, so that's 9 months, you still haven't been able to sell the home, you're going to have another 90-day extension. So essentially, you have a year to sell the home. And if it's priced right, especially in this historically low inventory market, it won't be on the market that long. So in that aspect, the reverse actually is better than the forward. Myth number three, the home must be free and clear of any existing mortgages. Not true. If you have a mortgage on your home, that is factored into what you're going to receive on your reverse. And I'll get to that in a second too, about how you can receive the funds from the reverse. Myth number four, once the loan proceeds are received, you pay taxes on them. No, that equity in the home is it's your equity, so you do not pay taxes on that income. You do want to just check to make sure it doesn't affect your Medicaid. It doesn't affect your Medicare, but you want to. I always advise people to just make sure, and it's usually very apparent when it would be affecting your Medicaid, and I would advise somebody on that. Number five, the borrower is restricted on how to use the loan proceeds. There is no restrictions on what people use them for, and there's different ways to receive it. You can sometimes you just have enough equity where you're not having a mortgage payment, which depending on what your mortgage payment is, let's say it's $1,500 a month, just by not having a mortgage payment, that's a net cash flow of $1,500 doing a reverse. Sometimes you do have enough equity where you can get money out, and you have three options on that, really four. You can get a monthly payment, and it says term and tenure. Term is, let's say the borrower is 80 years old. They know they're going to move out when they're 90. So you just say, hey, I want a 10-year term on this reverse mortgage, and your monthly payment that you're going to receive is going to be higher than it would if you did the tenured, which is done as an actuarial table. If you live to be however old, if you live in the house for the rest of your life, is the tenure payment, and that usually tends to be lower. You can also get a lump sum out of it. And what they have done with that is they don't give you the full lump sum right away. They break it up into you get a certain amount the first year, and then you get the rest in the second year. And then the other is a line of credit, which actually has interest gained on it as a line of credit. I don't want to get really nerdy on you and go into the details of that, but the magic of the reverse is everybody's different and everybody has different needs. One of the first questions I ask is, what's the end game? What are you trying to do? Do you want to have the house in the family after you pass away? Do you need long-term care? Would you just like to have less stress because you don't have a monthly mortgage payment? Just as an example, I had a couple. Um, he was 72 years old, and he had a magic number. He just wanted to have $1,000 monthly payment on his reverse. So I ran the numbers, and he also had a car payment too. So I ran the numbers, and he was right around $700-800 he was going to receive per month. And then what I did was just go to the term uh, option and just reduced however many years he was going to be in it. Actually, he was 78 because we ended up doing a 12-year term, which was going to put him at 90. And he knew that he and his wife had decided they weren't going to want to take care of a house when they're 90. And so that actually bumped them up to $1,000 because it was a shorter term compared to the tenured, as if you were going to live in it for the rest of your life. And then the other thing was because he had that car payment, we were actually able to pay off with the proceeds from the reverse, pay off that car because he didn't have a lot of payments left on it, and he had like an extra 150, so it was like $1,150, $150 over what their goal was. So it's very flexible. Again, another reason why I really like the reverse because you can adjust it to whatever the person's long-term goal is. Myth number six: only poor people or those in dire straits need a reverse mortgage. Not true. In fact, those are the ones that I hate the most is people come to me too late because they don't know about it or they've been scared off by the reverse mortgage. But it's your equity in your home that you've worked your butt off to pay off or pay down considerably. And whatever your dreams are, I just put a list there. And actually, on the reverse mortgage website, they have real life examples. One guy actually just north of me in Florida, it's the community like John Travolta lives in, where their planes, their runway, they own planes, and their driveway is a runway where they can just back out of their backyard and fly off. And so he built a plane with the proceeds from his reverse mortgage so that he can continue his hobby after he had retired. Myth number seven: you can only use a reverse mortgage for refinance. That is the majority of what reverse mortgages are used for, but you can use it to buy a home. And why would you do that? And the simple answer is this: cash is king. Why give up all the money you have? Like, say you're downsizing and the house had been paid off. A lot of people will just take all that money and just buy the house, a new downsized house with cash, so they don't have a mortgage payment. But what if you could have 150, $200,000 left after purchasing this new home, and you still don't have a mortgage payment? And so that's a reverse report purchase. And I actually have a case study most recently. This is a real life case study. That's my stepmom is Toby. A couple years ago, my father, who I had mentioned earlier, really wanted to do a reverse mortgage because one of the questions people ask is, I want to leave my house to the kids. Well, we didn't want that. We don't want either of our parents' house. And so we knew that the house would be sold. So if you can use the equity in the house for your benefit, burn it. You changed as I had told my mom when I was trying to get her to do it. You changed my poopy pants when I was a kid. You fed me, and why don't you enjoy the fruits of your hard work paying down your mortgage? So my father was going to do a reverse mortgage. They lived in this 6-bedroom, 4,400 square foot house, and there was just two of them, so it was way too big. And they were, obviously they're getting older. My father was 78, my stepmom was 69, and downsizing to a first floor master suite home was very appealing. And they had started the process, and he was fixing up the house, getting it prepared to be listed, and was overexerting himself, fell, hit his head, passed away. So then it was my stepmother. I was putting her in a reverse mortgage, meaning she was going to use the proceeds from the sale of the current home to buy a new home. Obviously, just like a forward, she'd be paying taxes and homeowners insurance, but usually with, like you see here as the typical downsize, there's a mortgage. But for her, this is what was going on. We actually did a reverse for purchase on a new build, which is even more unique. But I'll tell you what the benefits of that was for all parties involved. So the list price on the house was 735, and it had a balance of 305. After the realtor commission and all, she had a little over $400,000. But she had some credit and income issues. Obviously she had her retirement, Social Security, and she was getting half of my father's. But for the type of home she wanted, uh, that wasn't going to be enough. And we ended up the house was 417.5 that she built, and the only you can obviously buy an existing home, but with the reverse, we really couldn't even get the process started till the home was 90 days from being complete. But again, she was going to have to pay her taxes and homeowner insurance, and but she wasn't going to have more mortgage, and she was going to be able to keep some of her money. So what we do with the reverse is um, we submit. Really, you don't need a lot of information. It's essentially based on birthdays. The older you are, the more money you get to keep. Is an easier way to say it, as opposed to um, the older you are, the more funds that are available. It's either way. So she was. This is a part of what's called a talk. It's the total annual loan cost, and that's kind of the first part of the process where you go through and you see what the maximum. So you see the maximum claim amount. That was the sale price, and the principal limit. That was essentially going to be what the loan amount was going to be, and I'm sorry, what she was going to have available to her, and then um, the cash due from the borrower was what she was going to have to put down. I'm sorry, yeah, initial principal limit was going to be the loan amount, and then the 268 was going to be what she was going to get back. What was finance closing costs? A lot of people, the closing costs are high compared to a mortgage. But what I always say is just think about how many times you have refinanced and the times you've owned the homes. And most people are over five, closer to 10 refinances. There's a transaction cost associated with that. Well, with the reverse, if you're only doing it once, the longer you're in a reverse mortgage, obviously that cost goes down. And I always suggest if it's going to be a situation where you're only going to be in it maybe 2, 3, 4 years, it's probably not going to be advantageous. But there's a calculation to do to see if that makes sense. Um, the other important piece of information on here is we use 4% appreciation on the home that we were building for her to see when the break even point was going to be. And this is also part of the total loan analysis. And it's a little blurry, but what I wanted to show here was the equity on the right hand side. It's since it's going up. See if I can zoom this up. I can't. The equity goes up, and then right around year 11 or 12, the equity is going down, but there's still a ton of equity. And you get down here to the bottom 30 years out, that's when that's the break even point. That's when the loan amount is equal to the value of the home, assuming a 4% appreciation. Now, historically, as long as they've been keeping track of appreciation, has been 6% appreciation on the home. Why is that? Well, our nation's population doubles every 50 years. Now, that'll change. It's going to stabilize because baby boomers are aging out and the millennials are kind of taking over. But what I wanted you to see here is that 30 years down the road, when she would be 100 years old, is when the loan amount would equal. Now, again, more than likely that's going to be 6 to 8%. So this is always comforting for someone I'm consulting with because they say, oh, well, I'm not going to be in the house that long and I'm still going to have equity in the house and I can pass that on to my heirs. And there's a whole consultation that goes on with talking to the kids because that's usually where the pushback comes from. Here for us, we didn't have an issue there. So what were the advantages of doing the reverse purchase in this situation? So credit isn't factored into a reverse mortgage unless you're credit challenged. My stepmom was a little credit challenged, but it wasn't so bad where she would have to do what's called a Lisa, and the Lisa's life expectancy set aside. And what that is essentially taking the escrows and including them into the loan amount, which means the loan amount is going to be higher, which means you're not going to have access to as much money, which meant she wouldn't have been able to buy as much house. Now we were totally fine with her buying a condo, so that the 1 or 2 bedroom condo wasn't going to cost a lot of money, and she wouldn't have to do any of the upkeep. But she has 3 boys and a daughter-in-law, and she wants us to be able to visit her. So that's why she decided on that price point. But she didn't need the Lisa. She had enough money to get a loan and have a little over $100,000 left over when all was said and done. And that was what we did was that with that was we paid off all the debt that was bringing her credit score down, so that moving into the new house, she would have a high credit score. Like all that stuff counts on cell phone, all the utilities that you use, they check your credit. So we were able to take a certain amount of money, get her credit score up with the proceeds, and then there's furniture that she needed to buy, so she had money. You can use it again. I always say look into long-term care because it's so expensive. Set up a policy that way. And so here's where it got interesting and why I really wanted to do this seminars, because I thought, well, first of all, we were going to do a reverse mortgage. The builder that we were working with, they said they had a reverse mortgage specialist, but I did the homework on it because I didn't necessarily, you don't necessarily want to do the loan for your relatives necessarily, but I was definitely going to just oversee and make sure it was being done right. Well, it turns out they didn't have anyone who was a reverse mortgage specialist. So what they were saying was, well, she can't have the upgrades. It was like $25,000 worth of upgrades because we weren't using their lender, because usually the builder has a lender. Well, their lender couldn't do it. So I essentially said, so what you're telling me is you're penalizing her because no one knows how to do a reverse purchase. And I wouldn't say I pulled a Karen because I was very pleasant about it. I said you should probably rethink this, because as a builder you're about to miss out on a $400,000 sale that you wouldn't have if you can't do a reverse mortgage. And both my stepmom and her realtor were happy, especially the realtor, because the realtor could get their commission that they wouldn't have, because she wasn't going to qualify for a mortgage at the time. And we didn't have time to build her credit up for her to be able to, and we didn't want her to have to make that monthly mortgage payment. So the builder now has a $400,000 sale using a reverse report purchase. The realtor now has a commission because I was able to do it myself. My stepmom was able to get that $25,000 upgrade because it totally made sense to them that, well, we can't do it, so we shouldn't penalize her because we can't do it. And so where I have here 25,000 in upgrades recouped in 10 to 11 months, was what that means is she didn't have a mortgage payment because she was doing a reverse purchase. So whatever upgrades she had, she's making that money back, in less than a year. So all the way around, and if there, let's say that there was a realtor that took my stepmom, or there was a listing agent. If it wasn't a builder, there's a listing agent selling an existing house. That listing agent wouldn't have gotten a sale from her because they only knew forward. And so with the reverse, it just opens up another avenue of income for realtors. And, again, I don't want to get too far in the weeds on how it actually worked. But hopefully those are the basics. I wanted to show you, I'm going to share the screen, and I wanted to show you the reverse mortgage website. All right, so this is it. This is normal National Reverse Mortgage Lenders Association. This is their website. It's so I advise anybody to go here. It just has all the education in there. It has a calculator so you can go in and plug in the numbers um, for your specific situation. And because they essentially use the HECM reverse mortgage, the number is going to be very close to what a lender would do. Borrower stories, I really like that because this kind of opens up people's minds on what they can do with a reverse mortgage, um, testimonials, that type of thing. So I think that's it. If you have any questions, please feel free to shoot them into the chat. Um, I'm not sure if there's anybody out there. No questions, I see. So if you want to get in contact with me again, let's show that my contact information, my cell phone, my email. Feel free to reach out to me. Happy to answer any questions. We land in 8 states in Puerto Rico. And even if you're in one of the states we don't lend in, I've done way more reverse mortgage education than I have done actual transactions because I think besides it being important that people understand that they're not the scary product that people think they are, and there's many advantages to using them. Um, but I just think it's also important to just help people understand, make a decision based on good information. So you don't necessarily have to be in any states we lend in to get my assistance. And appreciate your time. I think I'm going to be doing this again next month, tentatively May 15th, but I will send out reminders for you. That's it. Have a fantastic day.